Hey everyone, John Henry here, slingshotfutures.com, and welcome to the daily market outlook for futures and Forex. This is where we take a look at our big six markets, 3 on the futures and 3 on the currency pairs, and we look to formulate an attack method for tomorrow so that we can be as prepared as possible for tomorrow's price action. Now, coming into today, there was a lot of speculation on whether or not the Dow was going to be able to maintain that 20,000 level. We broke above it yesterday. Are they going to be able to stick it to these highs and keep it up there? And sure enough, so far so good. Now, along with that, today overall was okay. We had some decent movement back and forth, but for the most part, we really didn't accomplish a whole lot. Crude oil had a lot of nice movement, but that's about it. Everything else was relatively stagnant. And that does mean that tomorrow we may actually have a chance at some good movement. We have 8:30 news, 2 big announcements coming out tomorrow morning with the core durable goods orders as well as the GDP. So a lot of good things can get the markets moving tomorrow, and that would be something I would definitely look for. Now, first up on the list, we have gold. Gold overall has a bear tone to it, working its way lower. Nice bearish movement overall. And it does look like they tried to get that bear channel going. And once they broke out of that bear channel, you can see how they came back, retested it, retested it, retested it, retested it. And now we're finally back there again, and we're trying to find more resistance here. Now, all of that being said, we are running into a little bit of a problem here. They're not respecting it as nicely. They were super aggressive here and here. They didn't even allow the market to come back and test it. And now we're kind of seeing them break through it a little bit. We're forming a large area of inventory between 1191.1 to 90.3. And all of that back and forth that we're getting right now is kind of ending us as a range. Now, the overall momentum, still bearish. I definitely still want to be a seller, but it's going to be difficult to be a seller this far up, right? Without at least getting a trap or something to keep things going, or until we break down this rising support. As long as this rising support's in the way, we're going to have a little bit of trouble to the downside. So if we can start breaking this down, then looking for a retrace and selling that, that would be a really nice option, or looking for them to trap above the highs, especially above 91.1, or 90.3, and that area finding selling pressure right around the top of falling resistance, as well as the earlier channel highs. Just basically to see, do they want to hold it? Was this all just one massive head fake down? If it was, then you're expecting them to see the same thing on the opposite side before deciding what they want to do. So at the moment, I would like to sell, but not until we can either break this area of rising support or get a trap above 91.1 for some better sell pricing. Over on crude oil, really nice bullish movement after the open, right? We started the day not in the best of ways, relatively range bound, lots of back and forth, ground its way higher, made a new low earlier in the morning at around 5, and then just rocket ship to the upside as soon as that market open hit. Now that open that hit, driving this market all the way up, slamming through last month's levels. It did miss last month's open at 54.09, but we're getting pinned against last month's low. We're having a really difficult time here. So with this overall movement getting stuck around here and now seeing a wedge at play, we have a big spike up and now we have a wedge. And with a spike and wedge, very similar to a spike and channel type formation, you're expecting them to break out, right? We have a bullish bias. We ran higher into this wedge. So what I would really like to see them do is break lower, test this area of interest, the large area of inventory. It completely stopped that sell move in its tracks. Find buying support between 53.64 down to 59, maybe even a little bit underneath it, and then look for that next attempt to go towards the highs. We've been making consecutive lower highs, so there is a little bit of a concern, but at the same time, we are also making consecutive higher lows. So the argument is on both sides, which basically means we're probably in a range. So more so looking to buy low than sell high, but both options may be applicable as we go into tomorrow. Now, one thing that you may have seen on there, before I forget, a little bit further up, the buyers do have a major objective above us at 54.39 if this does end up breaking higher. If we can break down and then pop back up again, that would be the major objective that buyers are going to be looking for up at 54.39. So there is a little bit of extended movement potential towards the upside. I wanted to make sure to get that covered before we head on over to the next one. So over on the Dow, another situation where we're range bound, right? I know, talking about the same thing over and over and over again. But again, this one really kind of hinges off the fact that they're trying to hold above that 20,000 area. As long as they can hold above that 20,000 area, we are feeling really good. The buyers have a lot of sentiment to the upside still. When they tried to come back to it, they held it very aggressively. They didn't even let the market actually test it, and that's a good sign. Now, the overall bullishness that did form in the early morning, they tried taking all of it back, and all they really managed to do was get a deep pullback that the buyers bought back into. Now, that did form in a little bit of an inventory area between 20,000 and 6 down to 1, looking for buyers to scale in. You can see every time they tried to come down, it was a big failure on the lows. That all said, there's also been a lot of failures on the highs. The most recent major area of interest that we've seen is going to be at 20,058 to 55, and if they can break above that, 65 to 69. Overall, I would still much rather be a buyer here. We have a nice bullish bias, and so far, I mean, all of the big moves and all of the runs have been to the upside. Nice, consistent bullish movement. Nice, consistent bullish movement. Nice, consistent bullish movement. Nice, consistent bullish movement. There were a few that the bears had a shot at earlier in the morning, but when they slam back up like that, it kind of invalidated all of those. So as long as we stay above this low area and above that 20,000 mark, we've got a lot of potential buying pressure to grind the market even further up. So looking to be a buyer, but preferably on a pullback. Over on the Euro USD, we have a relatively strong downward move, and I think that's kind of an understatement. With this amount of bearishness in play, you're expecting to see either we go into a range, right? The sellers have made their move, and arguably they have. They've had the entire move of the day. So they're going to take some profit down here, and that's going to cause a bounce. But we're looking for some selling pressure to give it one more shot to the downside. And that's really what we're looking for here. We have a big move down. We've now broken underneath that rising area of support. The rising area of resistance attempted a breakout and failed, and that adds even more gas to the tank for the sellers to attempt to drive the market lower. And we're breaking it right now. What I would really like to see is either selling small here looking for continuation, or looking for a retrace to test it again, see if the sellers want to defend it, and then break down lower. Either way, we have major sellers' objectives down at 64.76, and that would be the final objective to the downside, unless something crazy happens and the markets go nuts. We'll have to wait and see. Over on the pound dollar, we have a range now at the end of the day. It did look like it was going to have a nice bull trend, and then it broke down, and then it broke up, and then it broke down. Very range bound, right? So with that range, you'd be thinking, okay, well, the buyers are probably going to be buying low, sellers are going to be selling high, and if they don't work, i.e. this, it breaks down aggressively, the sellers will try to get out of break even and shove the market down for another leg. And these are pretty darn close to equal to each other. Nice measured move to the downside, finding inventory support at around 25,626 to 566, and now we're showing a slight bullish trend. I really wouldn't call it a trend. It is, but more of a range with a slight upside bias, let's be honest here. Now, the overall momentum, still very much bearish. Sellers are looking to sell high and try to get the move going lower. What I would really like to see, if you're not already in short looking for the move down, if we can get one more push higher, it might only be to around that 2600 mark, but what I would really like to see is at least a trap of the highs above 2610, or getting back up to that 26.1 to 228 area to look for selling pressure there. Again, right now, there looks to be a lot of bearish pressure. We might not be able to back up that far, and it may just run away now. Major objectives to the downside is going to be at 626 to 566 on the way lower to see if the buyers want to defend it there. And if they do, we may just see a small little head fake underneath, and then we go into a range for tomorrow. And then finally, over on the dollar yen. The dollar yen, very nice bullish run higher, and we just ended not too long ago a big spike to the upside that the sellers tried to take back, right? Big key note there. If we look at it, the sellers came in and they tried fading that big spike, but they couldn't even break down below the lows of it. Now, what does that tell us? Well, that tells us that buyers probably bought that bull spike up, and maybe they scaled in lower if they were able to, but their stops are going to be either underneath there, underneath here, underneath the major low, and none of them got hit. So all of the buyers are still in the market looking for the move to go higher, and now they're back into positive territory, right? Put yourself in the shoes of the buyer who bought here. You're now in the green. Chances are stops are probably going to move up a little bit tighter, just to reduce a little bit of the risk. But still, the buyers are finally starting to see potential profitability. The overall objective is going to be the upside at the swing high, back in that 114.80s to 90s area. Now, if we zoom out a little bit, we can see that the buyers have a major objective into the 115s. 115.102 on that run higher is the open area that buyers would love to see the market get up to. Now, at the moment, is pretty high up, right? It's difficult to be a buyer right now. What I would rather see is a pullback, whether it's just a small little pullback or whether it's a bigger one, to buy into. Now, a smaller pullback could be somewhere inside here. You'd be looking for right around, I'd probably say the lowest point, 114.266 to around 342. In that area would be a nice area to be an aggressive earlier buyer. The better buy would be under 114.078, looking for a quick little fake out underneath it, maybe even test that prior high a day, and then bounce right back up towards a new high. Either way, though, major objectives still unfilled to the upside and looking to hit. Now, we've talked about it several times before. If we zoom way out, what are we also getting close to? Well, guess what? We filled it, right? We've been talking about this weekend gap for a decent amount of time, and we finally hit it. Now, I know a lot of people called me crazy back when we were talking about filling that gap down here, but, well, yeah, look where we are now. So this may be all of the upward momentum that we get. Even though there is some large upside objectives to 115.102, it's very difficult to ignore the potential of a head fake above, get another test, a fake break of the highs of that most recent attempt, and then dump all the way back down to the lows. That is a feasible possibility that we've seen several times. Now, usually when you get that head fake and a big crash back down to the lows, it happens on Tuesday, Wednesday. There's some time for it to move. Chances are we're not going to get that big collapse in one day. It is possible. Everything is possible when it comes to the markets, but chances are we may start the bear trend if it does kick off. Overall, though, that might be a little bit of a delay going into next week. Either way, right now, the buyers are in control, looking to buy short-term with the understanding that we may be running out of time to the upside after filling that weekend gap. So overall, very nice movement today. A little bit slow, a little bit range-bound across the board. We had big breakout moves, and then they just kind of fell apart for a little while. Big breakout move, and then it just went range-bound again, right? So a lot of back and forth like that, and generally speaking, what we would like to do in those types of scenarios is get in while the breakout is occurring, and then stay out through the rest. Easier said than done, I'm sure. If you've traded for any amount of time, you know exactly that feeling. So overall, that's going to do it for today. If you have any questions about it, feel free to send me an email, jbrink@slingshotfutures.com. Make sure to make that plan, trade the plan, follow those rules, and we will see you all on Monday.